Hi, everyone. My name is Boris Revsin, a co-host of the Blockchain Brief. Every episode, we interview innovators and executives in the blockchain and crypto space. Today, I am excited to have Craig, a partner from New York-based Reciprocal VC. Craig, great to have you on the Blockchain Brief.
Hey, Boris. Thanks a lot for having me. Great to be here.
Awesome. So let's jump right into it. Tell us a little bit about your background, Craig, and then a little background on your firm.
Yeah, for sure. So I personally started my career in finance. Started at Morgan Stanley working in equity sales and trading. So I had the opportunity to dig into media telecom companies there for a little over 2 years, and then kind of want to get back to building stuff, building companies. In college, I co-founded a mobile ticketing company for college campus events, and it was just such a great experience. I wanted to get back to that feeling of contributing towards building a company. So I left Morgan Stanley, joined a company called Fiscal Note. It's an AI SaaS business based out of DC. And I was the first salesperson there, helped kind of take their beta product and turn it into a real go-to-market strategy and figuring out how we were going to scale that business up. So it went from kind of seller to director of sales, managing a handful of sellers, and then worked my way into a head of revenue operations role, where I was kind of thinking like a year or two out, how do we iterate the go-to-market strategy so that we can continue to grow the business at a very high pace. When I moved on from there, I met my two partners here at Reciprocal, Mike and Josh, and it just seemed like a perfect fit. They were launching a fintech fund, Reciprocal, and early stage VC, and they were looking for someone who kind of had my specific set of skills. So finance and operator hybrid, and that's kind of what I bring to the table here. So my two partners, Mike and Josh, they come from also like very complementary backgrounds. So Mike spent 20 years in capital markets. He was a long short equity portfolio manager for the better part of a decade and a half. And Josh comes from payments and corporate VC. So he's been under the hood with how traditional payment rails and payment businesses work. He was working at JPMorgan Chase and Silicon Valley Bank. And then he moved into more of a corporate VC role where he was making investments off the balance sheet into companies like Square, GoPaygo, and the like.
That's great. It's good to see a venture fund that truly understands the fintech space. And I think that's often ignored with this whole new crop of crypto investors that are sometimes true speculators.
Yeah.
So we're sitting here and speaking during a pretty volatile week for the crypto markets. Tell me, how is Reciprocal thinking on a macro level about the crypto and blockchain ecosystem?
Yeah, for sure. So we definitely take a venture look, or look through a venture lens, I should say, when we approach the crypto market. So we're thinking very long term. We're thinking like 10-year secular trend. How is this going to impact the industries that we're looking to invest in? And then we kind of zoom in from there to figure out where we can capture the most value for the companies that we work with and for our investors. So I think, when you look back through previous kind of tech revolutions that have occurred over the last 200 years, everyone was kind of ushered in by reimagination or reconstruction of some kind of infrastructure, right? And I think with crypto, we're looking at it as if this is like our opportunity to reimagine a lot of the original infrastructure of the internet. So as a fintech-focused firm, we get really excited by the idea of building a standardization for transfer of value within the internet. So if you think of Web 1.0, the original architecture made it really easy to communicate data, send data packets from person to person. It was very open, and with the advent of e-commerce, when we wanted to channel payments through the internet, we kind of had to take analog systems and adopt them or bolt them onto the Web 1.0 infrastructure. So to counteract this or to make it more efficient, we essentially got more integrated, where these intermediaries came online to validate who people were, so that they could verify transactions and validate amounts, right? So if you claimed that you had amount of money, that intermediary could verify funds. So we got more integrated. right? And I think, as I said, these things tend to move kind of like open to closed. In a lot of ways, we've sacrificed the openness of the internet to accomplish that integration. So if you think of something like Apple Pay, right? It's kind of like the ultimate centralization, walled garden approach to accomplishing payment rails. And we've kind of fully sacrificed the decentralization of the original architecture for the internet in order to accomplish that. Just because one single, monopoly essentially owns the entire payment rail for that product. So that's an example of something that is digitally native, but unfortunately the consequence is that it's completely owned by Apple.
So that's an interesting view. It's almost like, the day-to-day crypto markets affect you far less from a mental standpoint because you're taking a longer-term approach. But longer term, you do run into threats like Apple fighting back against the forces of blockchain because they profit quite a bit from this closed system. Do you think that larger organizations like Apple, like Microsoft, maybe Google falls into that category, are they going to fight back against this open blockchain trend and build their own sort of permission technology? Or do you see them supporting some of these projects and maybe even piloting some of them internally?
Yeah. I mean, right now, I don't think they're going to push back. I just don't think it makes a lot of sense. That's, right now, cryptocurrency and decentralized systems are not really eating any market share from large centralized entities, right? They monetize, their massive stores of data. And, when you're thinking of like Microsoft, Google, and Amazon, they monetize their data to serve up, more commerce, but, they also have their massive cloud hosting businesses. Unfortunately, that, the decentralized economy still leverages quite a bit. So, I don't expect to see, I think there might be some skunkworks things or, some 10 person teams that are, experimenting, kind of behind the scenes, but I don't expect any massive, reactive kind of movements from the big guys.
That's a good perspective. I tend to agree with you there that they're sort of in the wait and see mentality at the moment. And hopefully when things do end up crossing paths, when the market cap is too large to ignore, they've now understood the technology enough to not try to destroy it. Speaking of which, talking about behemoths. So the regulatory environment, as most of our audience know, is chaotic. It's sort of like this layer cake where everyone's putting a stake in the ground, sometimes overlapping between the CFTC, the SEC, FinCEN, and more acronyms than I can remember. How does Reciprocal, or you, how do you think about the regulatory environment? Do we have more bad news and FUD ahead of us, or are things starting to coalesce around like general guidance?
Yeah. So, I might be like the rare optimist when it comes to the regulatory landscape. I think, the SEC and the CFTC, have been pretty clear in their actions, by way of regulating via enforcement. So, I expect to see more of that probably. Maybe in the next 6 to 12 months, we'll see, some kind of, classification of let's say Ether, or another like top 5 currency. But I think right now, for the foreseeable future, I don't think there's going to be any terrible knee-jerk kind of announcements. I think, they're going to keep cleaning up, the bad stuff, which is exactly what they should be doing, right? People who are committing fraud and, and out to swindle investors, they should absolutely be enforced against. So I think they've done a great job. They're the CFTC, the SEC, they're all understaffed, and I think they've done a fantastic job keeping up with the incredible pace of the growth of this ecosystem.
And so we heard that the SEC recently appointed what people are calling a crypto czar. And to me, that's almost a good thing because this person ideally in their team will now learn the ins and outs of the crypto ecosystem before trying to just make blanket rules like you might have found in New York with the BIT license. So in terms of the regulatory environment, Do you as a firm or do your portfolio companies tend to engage directly with the regulators, or there's like sort of like a steel wall where, look, we're only going to talk to you if we're coming after you and you did something wrong? Do you have any insight in that?
Yeah. I wouldn't say we, proactively reach out to regulators, but I do know that some of our portfolio companies and then companies that I speak with are being proactive in talking to them. And I think that's the right approach. I don't think, you kind of hide from the regulators and try and act like nothing's going on. I think it's productive, to have these conversations early and often and make sure we're all kind of working together, in the best interest of the space.
Great. So you've shared a little bit of your thesis with us. Obviously, you take the longer term view. It would seem that fintech and payments and those sort of companies are right in your sweet spot, though from our previous conversations, I know you'll talk to any company that makes sense for your sector. If you have something to add about your thesis, please do that. But I'm really curious what makes you unique in this sort of new ecosystem of crypto and venture investors that are looking into blockchain projects.
Yeah, for sure. So, I touched a little bit on like how we look at the market. As far as our thesis, long-term, 5 to 10 years, we're very excited about, some kind of decentralized application economy coming to fruition. I think, again, as fintech people and kind of like the reimagination of, the internet's infrastructure, I think there's a lot of opportunity to experiment with new business models, token-driven business models. And we're just like super excited about that. I think to get there, right now, I'm focused personally on what I like to call crypto-pragmatism. So that, to me, that means a couple, and this is something I've just completely made up myself, but, to me, that kind of means, we're thinking of first and foremost developer experience over user experience right now. It's kind of like a fun way of saying focus on infrastructure and building developers need, rather than, rushing to create a new version of Uber that's fully decentralized. Let's make sure that, the decentralized application developers of next year and 2 years from now have all of the tools, the languages, the platforms that they need in order to make those decentralized applications really valuable for users. So that's when we get to kind of that user experience level. I think we also have to think a little bit more about like what's crypto's unique differentiator to centralized systems. I was up at EdCon in Toronto last month, I think, and John Choi from the Ethereum Foundation did this amazing, talk about kind of, what does crypto need right now, and what's the unique differentiator from centralized systems. And I thought that was a fantastic way to put it, because if I was building a company, if I was running a startup, and I was kind of going through like the product management, go-to-market cycle, that's exactly the way I would think of it, right? Like, what's our unique differentiator versus the competition? So I think that's just a perfect way to think about it. And then lastly, kind of tying into that, it's, just because we're in a decentralized token-driven economy doesn't necessarily mean that the physics of company building are absent from the equation. So I think we very much still need to come to the table with an operator's mindset. We need to execute ruthlessly and have goals and milestones that are product and go-to-market driven, not just fundraising driven. So that's kind of where my head's at as far as our thesis and what I'm really excited about. As far as how we're unique, I'd say so. We take a little bit of a hybrid approach to the crypto space. So, first and foremost, we want to be company builders. So we want to be partners to founders, and we want to be there shoulder to shoulder if they'll have us, helping them build and strategize and work on governance and, tweak the, kind of token economics and token model and think through all of these complex things, that come up in the first couple of years of building your business. But additionally, we understand that, the liquid nature of cryptocurrencies gives us a pretty unique opportunity in that, venture is typically a long only strategy, right? You invest in equity, it's a 10-year lockup as far as, your investors. and you're there long for the long term. With cryptocurrency, we very much still want to be there for the long term with the companies we invest in, but the liquid cryptocurrency gives us a unique hedging opportunity as we start to see two-way markets develop. So we're actually going to be taking some of our assets under management and running a long short trading book in order to hedge out some of the risk in our long only kind of venture style investment portfolio, but also generate some tactical alpha based on short term trading.
That's very interesting, and that is definitely different from what I've seen in many of the funds interested in looking into blockchain projects. I talked to a whole bunch of funds that tell me their general strategy is either very actively trading, which many blockchain projects hate because that sounds like a quick flip, or hodl, and that's the extent of it. And I think it's going to be tough to compete as a fund as more and more of these crop up if you don't have a more nuanced strategy. So tell me what your investment size looks like, the stage that you're looking for, and then I'm very curious to hear your thoughts and vision on when you invest in equity, how that translates to tokens and where the true value is.
Yeah, sure. So all great questions. So typical investment for us on the venture side is going to be very early. So just in general, we're a seed to Series B venture firm. There's some things that are lost in translation when porting over the rounds to crypto. So I think we like to be very early. We're not necessarily afraid to be among the first checks into a company. And we want to be early stage advisors, so we're willing to kind of take that early risk and work shoulder to shoulder with founders. Check size. It's kind of stage dependent. So if we're classifying something as a seed, it's typically going to be 250 to $1 million type of initial investment. Series A is going to be 1 to 2 million, and Series B is 2 to 3. And we always reserve capital for our investments.
It's refreshing to hear that you'll write seed checks of that size. I forget who it was, but manager at a fund recently told me that the world in crypto is full of fast followers, which I think is a fun way of saying, let someone else do the diligence, let's look at the brand names and then chase after them. And I think the one thing that all investing in general needs is to step up their game and lead some of these rounds. And then you're going to start to see a lot more people, I think, differentiate by being able to pick winners. And you see the top funds in the space have consistently been able to, at the very least, co-lead some of these interesting deals.
Yeah, definitely. Yeah, and like our strategy, it is not scalable to the extent where you deploy 5 checks a month, right? If we're really doing what we say we will and working very closely with founders and helping them build businesses, then we're going to be more concentrated from an investment standpoint. We're going to make larger bets into those companies, and we're really going to invest our time in helping those founders. So yeah, we are very careful about deploying capital and the founders and companies that we invest in.
Good. Well, conviction, I think, helps quite a bit, especially in this sort of volatile market. Tell me how you think about equity versus tokens. Do you do both? Do you sometimes get both as part of an investment? I don't need your entire thesis on this, but I'm curious, binary. Will you invest in just tokens? Will you invest in just equity? Will you invest in a split?
Yeah, it's a great question. It's something that's kind of a, evolving, topic of conversation right now, but, we will invest in either. I think for really early stage venture, we prefer equity. And, National Venture Capital Association has, kind of standard language now to add into convertible notes and Series A investments for token offerings in the future. And I think, equity early on just kind of standardizes certain practices around governance and board creation and, future financings that are really nice for us to have given the amount of time and obviously capital that we're investing. So, we want to make sure that our incentives are completely transparent and aligned with the founders. And I think that's best accomplished very early on through equity or convertible note. But that doesn't mean that we're unwilling to participate in tokens if the incentives are properly structured, right? That's the big thing, is we want to make sure, if we're long-term investing in you as a founder and your vision, we just want to make sure that you're there very long-term and we're driving value creation towards the same asset. Does that make sense?
It does. I get that. And I think early on, people played fast and loose with the sort of lockup periods, investing structure for founders. And I think as more sophisticated firms like yours have gotten into the crypto space, they've moved some of those traditional lockup investing periods onto these founders. And I personally, as an investor, find them critical because a lot of this is still in people's heads and a lot in the PhD white papers, right? What we really need to see is over the course of 4 years, can you get this out into a test net and a main net and then get true user adoption? And that takes years.
Yeah.
And we might find that the most successful ones take many years. So I totally agree with that mindset.
And it all ties back to the crypto-pragmatism, right? Like let's focus on go-to-market and user personas and acceptance testing and all of these things that traditional companies do to build a business, right?
Yeah, and you see companies like EOS and Ethereum go through these shifts where they realize that no matter how much money you've raised, no matter how big your community is, you can't have bugs in the code, right? You can't have vulnerabilities, you can't have attack vectors, and oftentimes that requires, whether a volunteer or full-time, a professional workforce, professional security folks. So we have time for 2 more questions. I want to hear if you're willing to share a recent investment that you can talk about. Doesn't matter how recent, just a deal that Reciprocal has done.
Yeah. So our most recent, we've invested in a few companies this year, but our most recent crypto investment was the end of last year, a company called Radar Relay. So Radar Relay is essentially a decentralized pool of liquidity for trading. So it's a trading venue where you can essentially accomplish peer-to-peer transactions without having to relinquish your identity and relinquish control of your assets as you would with like a Coinbase or Binance. So what really caught my eye with Radar is that Alan, the CEO, his big vision is to kind of accomplish this massive onboarding of the world to this future token economy, right? So if we envision token-driven business models coming to fruition in the future, there's going to have to be massive pools of liquidity that can be accessed in real time, both for users and DApp and decentralized applications. I personally believe that tokens should be abstracted away or removed from the user equation long-term in the future. But underneath the surface, all of these decentralized applications will still need to source liquidity in a real-time manner to manage their personal treasuries and their exposures, but also to use different services beneath them in the technology stack. So that was incredibly compelling, as far as big vision. And I think there are a lot of different products, both financial and otherwise, that can be added to something like Radar once you have that initial gravitational pull of liquidity. There's this kind of common saying in capital markets that liquidity begets liquidity. So, if they can build the best products, have the most liquidity, that will bring more liquidity to the table. And it kind of has this gravitational pull, essentially just a network effect, that will give them the opportunity to move both vertically in the financial technology stack, but also horizontally into new products and markets.
And Alan has been on the Blockchain Brief previously. He's been on a panel. He's a good friend. I'm very impressed by his vision and his sort of ethical view on the blockchain and crypto space. So that's great. Everyone should check out my interview with Alan on our YouTube channel. So final question. This has been a phenomenal interview. How can people get in contact with you and pitch their awesome products?
Yeah, absolutely. Always looking to talk to founders who have really cool ideas, working on new projects. You can reach me at Craig at recvc.com, or you can follow me on Twitter, just at Craig Burel. Yeah, those are the two best ways to get a hold of me.
Great. We'll link to you in the show notes. All right. Well, Craig, thank you for joining us on the Blockchain Brief.
Awesome. Thanks so much, Boris.